Stocks are down, but one sector is winning today. It's utilities, and we've seen investors take a lot of interest in the notion of how to power the big tech build out around AI. Joining us, Brandon Rakszawski is a director of product management at VanEck, home of a nuclear ETF that we're going to talk about. Brandon, thanks for being on the show this afternoon.
Hey, Oliver, thanks for having me.
Sure thing. All right, so tell me, when you guys think about building strategies around energy and utilities right now, how much is related to tech? How much is like a hype that we got to be careful about?
Well, you always have to be careful as an investor, but there's a lot of tailwind behind energy, electricity demand, and big tech. I mean, you've seen so many announcements in the recent period. All these big tech names partnering with different utility providers. Some really innovative nuclear companies that they're essentially trying to source and secure electricity supply for their growing demand into the future. So there's been a huge tie to tech and the need for more power for these energy nuclear companies.
I don't want to expand too much or extrapolate too much from one day, but today's kind of an interesting message because you've got the actual hyperscalers and tech CapEx spenders all getting hit, but then the actual energy providers acting a little bit more stable. Could that be something we see in perpetuity? Could we see either outperformance or at least a reduced vol in the energy side of this trade?
Yeah, it's really interesting because there's so many segments within the supply chain for power for all of these companies. You know, particular to nuclear, you've got your upstream, you got your uranium miners. They've benefited greatly over the last 2 to 3 years from a lot of the pent up demand for nuclear power. Now that's trickling down into the utilities and the power providers. They've really stood out this year, along with these innovative small modular reactor companies. So I think the dynamics within nuclear energy are really fascinating because what we're used to in traditional energy markets are oil prices go up, oil prices go down, and you see the trickle-on effect as you look from upstream to downstream within that energy supply. But here, the dynamics are all over the place because nuclear and uranium, they're kind of just a different business model. So there's been some volatility in the space because anything tied to AI, big tech, and hyperscalers, you're gonna see a little bit of volatility. But we're talking about a lot of utilities names that are traditionally a lower volatility sector. So I think we could see some of those dynamics play out over time as the big tech names are so tied to market sentiment right now, concerns over valuations where these nuclear companies are really scaling up and seeing a lot of growth prospect as it relates to meeting this energy demand.
Thinking about how a stock qualifies for the NLR fund and just generally how you think about speculation versus reality, just to kind of go off that framing of the potential for a lot of growth. It seems like some of it's already starting. Some of it is kind of coming from an existing framework of energy where there's plants that have been opened that now are maybe going to be just getting better prices or finding more buyers for their energy. And there's stuff that's like really early on. Like we had the Oklo CEO on just in the last week, and they're looking to target 2027 as their first functioning site, and the stock's up like 200%. I mean, how do you kind of filter through what's actually happening now versus what's going to depend on a lot to fall into place over multiple years?
Yeah, you really have to have a forward-looking mindset when designing these products. What many investors would be shocked to learn is that we've had this ETF in the market since 2007. It's one of our first ETFs. Nuclear's been around, right? So we build these ETFs and the underlying index methodology to be sustainable, long-lasting. We see trends in the market. Sometimes they're cyclical, but we want them to stand the test of time. And that's why we designed this particular offering to be comprehensive of the entire nuclear value chain. So the ETF considers and includes uranium miners on the upstream side, those that are supplying uranium to the entire ecosystem. We also include the downstream, the utility providers, many of them the traditional names you're used to hearing on the utility side, but those that are purely, operating within the nuclear energy ecosystem. But then, we have this ability for these innovative kind of industrials companies, but they're more tech oriented in some regards, like Oklo and NewScale and others that are developing cutting edge technology. So it's really built, it's kind of future proofed. And a lot of those really exciting companies right now, they're private and they're hard to access for many investors. But if they do, tap the public markets and IPO or use the SPAC process, they can enter our index in the future once eligible.
Got it. Okay. You guys have had 300 million in net new flows this year. I take it the interest has risen substantially, even though it's been around for a long time.
Sure has. Yeah. I mean, just the trading volume spiking, net new inflows, conversations we're having with investors of all types, really focused and honed in on the space. It's been an interesting kind of an evolution. Because we do have some uranium mining exposure within the portfolio, we have had some attention with this ETF historically because it's played out in phases. As in 2021, 22, we saw uranium prices really spike. The invasion of Ukraine was another catalyst there, just with geopolitical turmoil in some of the major uranium producing countries, Kazakhstan and others, related to Russia. So there's been spikes and there's been a lot of interest in uranium miners, and now that's slowly filtering through that full supply chain essentially of nuclear power, and that's where this ETF, this strategy has really benefited because it's touched on all of those segments within that ecosystem and really became a high profile ETF overnight. It's really fascinating how much interest there is in this space right now.
Yeah, big move from $68 at the low to almost 100 in the course of 2 months. Brandon, thanks for the walkthrough here of the process and the strategy to get them in the fund. Definitely one to keep a closer eye on, and timely for us. A day where the energy stocks are outperforming. Thanks. Brandon Rakszawski, Director of Product Management at VanEck. NLR is the fund.